Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first we'll be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is essentially what hedge funds and the big players are doing in the market and how they are moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong historical support and demand area. From here, in fact, all these previous rejections to the upside were created. And what we can see here is that at the moment, the market is testing this exact same level of historical support and demand, has already started rejecting it to the upside. So in a situation like this, we could expect more bullish continuation to be created away from this level. So from a monthly standpoint, everything seems quite bullish with the possibility of seeing more continuation to the upside, as already happened every single time that the market tested this very strong historical monthly demand and support area. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, it is quite clear that this market just shifted from a weekly bearish market to a weekly bullish market from a structure perspective. In fact, we went from creating lower lows and lower highs to then having this horizontal accumulation area. And now the market shifted to creating higher highs and higher lows. And as the market is creating higher highs and higher lows, we could expect more bullish continuation to be created. In fact, the last movement of this market, if we are to track the creation of these levels, was the creation of a new higher high. So higher than this previous high. And now we have the possibility of creating a new higher low, and from here going and creating a new higher high. Because if we are to identify each and every one of these levels, we can see how essentially starting from here we had the previous low, and here we had the previous high. Then we had a new higher high, then we had a new higher low, another higher high, another higher low, another higher high, and now it would be the turn of the creation of a new higher low, and for this market to continue higher. Now, we can also notice how the market is currently testing exactly the previous weekly resistance that is now turned support at this level. In fact, if we look closely, we can see how exactly from here, all this previous move to the downside was created. So this is previous weekly resistance, which is now turned support at this level. We can also notice that from a pattern standpoint, we have a very clear impulse followed by this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a perfect 50% retracement lining up exactly with the previous resistance turned support, creating a confluence of support at this level, which we could in fact expect this market to potentially reject to the upside. Dropping down the daily time frame, what do we see? Well, from a daily perspective, it is quite clear how we had a strong move to the downside, and then the market entered into this horizontal area, inside of which it has been just moving in a range. Now, usually when you have the market ranging inside of a confluence of support area, which is exactly what we have in this case, because as we have just identified, from a weekly perspective, we have confluence of support inside of this zone. And when you have a range inside of a confluence of support zone, usually means that you're having an accumulation area, inside of which institutions are accumulating longs. And at that point, you would expect a potential rejection to the upside. Now, if you never heard about accumulation and distribution areas, I also made a full tutorial on that. You can go and check it out in the tutorials playlist on my channel. And after an accumulation area, essentially, there is a good probability for a potential rejection to the upside. Now, speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders. So the COT data, so essentially what hedge funds and the big players in the market are doing and how they are moving their orders. Now, if we check the data precisely on the euro, what we can see is that with the last reports, we had a massive increase of net positions. We went, in fact, from having 75.5k net positions all the way up to having 118.8k net positions. So we had a massive increase of net positions, making the euro stronger. And keep in mind that a euro getting stronger means that actually institutions have been longing euro USD, because always remember that if you're checking the data just for the euro, you're actually already checking euro USD, because all currencies on the spot are traded against the USD. So moving back to the chart and keeping in mind that institutions are adding longs at the moment and increasing their net positions, what I would expect in a situation like this? Well, as usual, first of all, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, in a situation like this, what I would expect is that if this market would shift from an intraday bearish market during this move to the downside to an intraday bullish market at that point, I would expect a potential rejection to the upside away from this confluence of support area that we have just identified from a weekly perspective. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to get access to the most complete all-inclusive mentorship program that you could think of. In fact, you have all my courses, so risk management and trading psychology course, the day trading course, swing trading course, the MQL4 programming course on automated trading. And you also have the possibility to gain access to all my software, so the COT data software, the trading station software. And if you continue to scroll down on the website, what you will see is that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.